You're watching today's Daily Market Comment by Mario Sachikiriakos. I'm Christina Marujas, and thank you for joining us here at XM.com. After a week of mayhem across global markets, calmer tones are finally prevailing. The source of all the stress was the bond market, where yields started to break down. Such a move usually signals worries about weaker economic growth, which would ultimately translate into slower rate increases by central banks. When the bond market says something might be wrong, other asset classes pay attention. Stock markets came under fire yesterday and commodity currencies got hammered, while safe havens like the yen and Swiss franc shine bright. However, that may only be half the story. The other part may be more technical in nature. Positioning in the bond market was stretched short before this debacle, which means everyone was betting on higher yields by shorting the actual bonds. Fears around the Delta variant might have sparked the initial move, but it was likely amplified by a ferocious short squeeze in treasuries. This pandemonium could fade soon as the short squeeze runs its course. We are already seeing signs of that today, with treasury yields rebounding and Wall Street stabilizing. If that is the case, the latest gains in the yen and franc could evaporate soon. The US dollar declined yesterday but is on track to close the week higher overall. That is quite impressive, considering that falling treasury yields are usually the dollar's kryptonite and is a testament to the reserve currency's safe haven appeal. If the world economy and especially emerging markets are going to take a hit as the Delta variant spreads, then the dollar is probably the place to hide. The dollar is essentially an all-weather currency. It can shine both when markets are fearful and when optimism is riding high amid expectations of U.S. economic exceptionalism. Over in commodities, gold could not advance yesterday, even despite a softer dollar and falling real yields. On the bright side, the precious metal is set to close the week with decent gains, but still the big picture remains gloomy. It will be tough for bullion to regain its former glory if the havoc in bonds was truly a short squeeze that will fade out, and with inflation fear subsiding. As for today, the spotlight will fall on the minutes of the latest European Central Bank meeting and jobs numbers out of Canada. This was the Daily Market Comment here at XM.com. Have a great weekend.